again, there is a significant reduction at the net NPA level as well. So these are some of the first earnings numbers are coming in at this point in time for State Bank of India.
Prashant, the NII has come in at 26,642 crores, if I'm not wrong. Income of 66,500 crores. Interest expenses of 39,859 crores. Yes, 26,642. That's a strong beat on NII. The NII growth is at 16.1% YOY and about 17% sequentially. So it looks like there is a sharp margin improvement which may play out as and when we get the details. But yes, net interest margin has improved substantially.
Okay, so that is the first cut numbers which are coming through, which means that there is a significant beat as far as NII is concerned. And as I told you, net profits prima facie also look about 1,000 crores better than what the expectations are. Sharp reduction in net NPAs and gross NPLs coming in as well. Again, we are looking at these numbers on a quarter-on-quarter basis. We'll put out the other comparison as well. We have first reactions coming through. Abhishek, of course, will continue to dig into the press release, get us more details. Things like the actual, the absolute NPA numbers. Slippages obviously will come a little later. But we have the ratios right now. Kunal Shah of ICICI Securities is joining in for the first quick check. Kunal, thanks very much. I trust you're seeing the numbers as they're coming in. Both on the NII and profits numbers look much better than the poll. What are your first thoughts?
Yeah, so overall, on the face of it, it seems to be the better than the expectations, and the overall provisioning number, I think that's pretty much in line with what was there in Q4. So that's where I think maybe the beat would largely be because state would have built in a slightly higher provisioning for them, as they were yet to build any kind of contingency buffer. So to that extent, the expectations on the provisioning was it could be higher quarter on quarter, and that is what has surprised. Otherwise, in terms of GNPLs, it's a down. Technically, there should not have been much slippage. Plus, I think it would be driven by write-offs as well. Okay. But key would be to look out in terms of their disclosures on the moratorium and see as to how it pans out overall in terms of asset quality. But on the face of it, I think the overall provisioning seems to be quite lower than the expectation.
Okay, I'll just add few business details. The deposit momentum is really strong. YOY, the deposit growth is close to 16%. Quarter on quarter, the deposit growth is at 5.5%. Now, this is a strong movement over here, and despite which you are seeing a sharp improvement in net interest margin, they have been cutting down deposit rates, which are actually aiding in terms of your interest expense coming down. Advances growth, we were working with a number of 6 to 8%. Analyst, various analysts as per the poll, were working with a number of 6 to 8% growth. It has come in at 7.7% growth. So it's a healthy growth in terms of if you compare to the previous quarter, it was at 5.6%. We have Darpin Shah of SDFC Securities joining us. Darpin, what's your first take on the results?
Yeah, so the first take is the numbers are slightly better than expected lines, especially where the provisions, despite the provisions remaining elevated, they have shown a beat on profit. And in terms of asset quality, well, it was expected to be better given technically there should be no slippages during the quarter. The sharp drop in GNPA is a positive.
Okay. During quarter 1 FY21, as per the press release, bank has made an additional provision of 1,836 crore on account of COVID related accounts. So the provisions of 3,008 crore is held by bank on COVID related accounts as of June. So 3,008 and you have 1,836. So how do you make of the numbers, Darpin?
Yeah, so it was expected that they will continue to build up provisions for COVID, and that's what they have done in line with some of the large banks.
Okay.
Okay. Sorry for butting in, but what are the deposit growth numbers, Abhishek?
Deposit growth, Lata, is at 16% YOY and about 5.5% sequentially.
Okay, so that itself would explain a very good growth in net interest margins as well, because a large part would have come from low cost deposits. They've been cutting their deposit rates aggressively. Any guesses on what the net interest margin can be, Darpin? And therefore, from what you know, are you going to change your view of the stock? The stock is up 3% now. Is Darpin with us? Yeah, Darpin, any guesses on the net interest margin? Because you're seeing a 16% growth in deposits and I guess an 8% growth in advances. Deposits are more likely to be low cost deposits because they've seriously even lowered their 1 year term deposits. So what's your guess on the margin?
Darpin, are you there?
I think she can't hear us.
Kunal with us.
Okay, fresh slippages are at 3637 crores. This one, Abhishek. I don't know whether this is net.
I'll give you the
fresh slippages has come at 3637, which is I think much lower than what has been.
It's on the lower side, Lata. 3,637 crores compared to 8,101 crore in the previous quarter. So that's down about 55% on a sequential basis. Lata,
but is that very impressive? Sorry, Prakash Diwan, would that be very impressive because I guess the slippages were lower. Prakash Diwan has joined us. Whether slippages are lower because of moratorium?
See, there are two things that the numbers tell you, Lata, very clearly. One is that they've definitely focused on making sure that quality of assets, the NPAs, gross NPAs and net NPAs remains very much within control, because the fresh lending growth is much poorer, much weaker in this environment. That's one. The other improvement could have been in the mobilization of deposits. So I can't see in this the CASA numbers or what kind of this thing they have. Improvement on the liability side, but it is going to be very clearly advantage that both the two-pronged advantage of having done quality lending, selective but quality lending, and of course cost of deposits coming down. So that's where everything is kind of getting into place, and the market would probably accept that as a better than inline expectations of sorts. But I'm not too sure whether any kind of moratorium impact is yet factored, completely priced in or not, because all banks are reporting, cut in moratorium, that's definitely there. That's because of the kind of education that borrowers are getting, that it's not in their favor to skip EMIs if they can pay. So I would still wait for one more quarter for that impact to be completely priced in. But yes, the other metrics definitely look quite positive in SBI.
Okay, Abhishek, have you been able to delve into the numbers a little more?
Yeah, you were asking about net interest margin, Lata. As per my calculation, and this is not the perfect number to look at, it looks like more than 50 basis point jump in net interest margin on a sequential basis. In fact, my calculation shows about 88 basis point, but we'll just wait for the final numbers to come from the management. Just to alert our viewers, last quarter the net interest margin was at multi-quarter low of 2.97%, and there is no one-off in the NII in terms of tax refund or anything to push the NII. The NII has solely come from two factors. Their yields have increased on a sequential basis because the loan book has declined sequentially by 1.5%, while the interest income is up 6%, and the despite strong deposit momentum, 5.5% sequentially, the interest expense is down 0.14. So it looks like cost of deposit has benefited a lot in terms of net interest margin improvement.
Would you worry that the NPA actually is higher, no?
The NPAs are higher,
isn't it?
Quarter on quarter, I saw numbers were
down 13% quarter on quarter in absolute value. Gross NPA.
Okay. All right. So I think I saw the wrong flip of the numbers. Okay, Prakash, can you delve into asset quality anymore, or you'll have to wait for more numbers from SBI?
No, I think we will, because all the other headline numbers I think they've already released, but we'll have to wait for the next level interpretation on that. But these numbers also adequately enough tell you that things are not as bad, and it's in the same lane as a Axis and a ICICI, that things are kind of much under control. But the market is expecting the banking sector to wilt under all this pressure on moratorium and on the lockdown impact, whereas the numbers that have come out till now don't actually give you that impression. So probably that's still in the offing, and then will probably happen with a lag, and that's what everybody's. Oh, so there you have your net interest. So NII is also much better than the expectations, but I would wait for the quality to comment on the quality of the numbers of the assets once we have more details.
Okay. Well, I guess we're all swimming in a little blindfold, because the NPA numbers, the lower slippages are all positive, but we all know that it's because there is a moratorium given to several borrowers. And unless we see the moratorium percentage and the very detailed breakup of the nature that Chola gave us, I guess we will not be able to comment much. Yeah, it is tough for a large bank like State Bank, but at the moment the market is happy with what it has. The fact that the margins have improved and slippages have fallen. Anything else that you can see positive?
No, Lata, as you mentioned it, the NII has surprised very positively. If you look at the last few quarters, NII growth is pretty strong.
We don't have the moratorium number yet.
No, I can't see it.
Part of the press release in most banks have been giving.
No, this is not a press release. We only have the results release.
Uploaded to the exchanges.
And the one that's uploaded. And that has the PCR number, but because it's mandatory. But moratorium is not part of the notes to accounts.
It's just moratorium provision detail is given. So this time they have made a provision of 1,836 crores, which compares to 1,172 crores in the previous quarter results. So not much of an increase, while you see for other banks, the provisions for moratorium alone or COVID-19 has increased substantially. It's not too much of an increase for this size.
There was a line made provision for balance of moratorium, was it?
No, I think it was frauds.
Okay.
Was,
all right. So that also doesn't give you an insight into
2,000 crores odd figure. Yeah, that was for fraud.
I think we will have to wait to read the details from the press release and from the investor presentation, where perhaps we will get an idea of whether the moratorium ask is lower, and whether the quality of the moratorium in terms of how many quarters were paid or how many months were paid, all those details we would know. And in any case, all these are of importance only up until August 6th. If on August 6th the governor were to announce a one-time restructuring, then the whole calculation of how do you look at the bank will change, because if it comes with a high provisioning of say 10 or 15%, it won't be 15, but if the ask is 10%, then again your look at the balance sheet and the P&L will change. Prakash, anything else you want to comment from the numbers you've seen?
No, so I was just listening to your discussion, and this provision coverage ratio at 86% is what I can make out in this disclosure.
Okay. Wait, 1 minute. I think I have an important line which I hope the ticker team can take down. I have a message that moratorium is 10%, is under 10%, to be precise 9.5%.
Wow.
I think that is big.
Just try to get
I can't ask him. He's sitting in the board meeting and giving me. But I think he's written under 10%. In brackets it is 9.5.
Okay. Just don't know percentage of customer or percentage of...
No, I would assume this is customers. Because I think by value...
Last time they gave us percentage of customers 23%.
See, by default it is better to believe that people will give you the more flattering number. And in most cases the number of customers is more flattering. By value it is a little more uncomfortable for the bank, or it's a little more adverse.
So this is also very good.
It's a very good number, and I think the ticker team should put that out. Moratorium at
23% last time. So 23% of customers opted last time. That has come down to 9.65 as Lata has mentioned.
9.5. I would assume that the comparable number is 23, but let's not put the versus number. Moratorium at 9.5. However, whichever way you cut it is a great number.
Okay, should we?
Yes, call it. Yeah,
I think we'll take a very quick break here. Prakash, thanks very much for staying on, and we will get more details and put that versus number, the final sort of figures on this, the moratorium number. But if it is what we are assuming it to be, the 9.5% number, that's a big improvement compared to last month. We will take a very quick break here and be back with more SBI details as also other stories.